On the night of July 16th, while most of Wall Street slept, a small research lab in Beijing pushed a model out into the world. By the next morning, American markets were bleeding. Nvidia is the company that has powered nearly every American AI bet for 3 straight years. It briefly stopped being the most valuable company on Earth. Apple took its place. The trigger was not a war. It was not a Fed decision. It was a language model. Its name is Kimi K3. Kimi K3 comes from Moonshot AI. This is a Beijing-based startup founded by Yang Jilin. The company released the model on July 16th. It has 2.8 trillion parameters. Tom's Hardware confirmed these specs. At launch, it was the largest open-weight AI model anyone had ever shipped. Its predecessor, K2, had 1 trillion parameters. That means the new model is nearly triple the size. In a single generation, here is what that number actually buys. Kimi K3 runs on a mixture of experts' architecture. It has close to 900 specialized internal subnetworks, but fewer than 2% of them switch on for any single response. The model is enormous on paper. In practice, only a sliver of it does the work on any given task. Think of it less like a single massive brain. Think of it more like a hospital with 900 specialists on staff. You do not wake up all 900 for a routine checkup. You page the 2 or 3 who are actually relevant. That is the efficiency trick. It makes a model this size cheap enough to actually run. Moonshot priced it that way too. Access costs roughly $3 per million input tokens. Output costs $15 per million tokens. That undercuts comparable Western models. The model ships with reasoning switched on by default. It also has native image understanding. There are 2 versions. One is built for chat and agent work. The other is built for large-scale parallel tasks. Full open weights are due by July 27th. That means anyone on Earth will be able to download the model and run it on their own hardware. This is not a hobby project. By mid-June, Moonshot's Kimi product line had already crossed roughly $300 million in annualized revenue. That figure comes from TechCrunch's reporting on the launch. Kimi K3 is also aimed squarely at the most lucrative corner of the AI market. That corner is long-horizon coding and autonomous agent work. These are the complex, multi-step tasks that enterprises currently pay the most money for. That is not an accident. This is the exact segment that Western labs have been counting on to justify their valuations. On independent testing, Kimi K3 does not win everything. It trails Anthropic's Claude Fable 5 and OpenAI's GPT 5.6 Sol overall. It edges past Claude Opus 4.8, but in specific arenas, especially front-end coding, it has already beaten Claude Fable 5 outright. There is a wrinkle worth flagging. Back in February, Anthropic accused Moonshot of training its models by distilling knowledge from millions of Claude conversations. Anthropic's count put that number at 3.4 million exchanges and said it happened without authorization. Kimi K3 now benchmarks within a few points of the very models named in that complaint. Is that a coincidence? Is it genuine engineering skill? Or is it evidence that the accusation had teeth? Nobody has definitively answered that question. We are reporting this as alleged, not settled. Either way, this is a serious frontier class model. And it came from a country that the United States government has spent 2 years trying to lock out of advanced chips. Wall Street did not wait to find out how good Kimi K3 actually was. It just reacted. The nervousness makes more sense once you see the scale of the wager underneath it. America's biggest technology companies have committed hundreds of billions of dollars a year to building the data, centers, chips, and power capacity this industry runs on. That bet only pays off if demand for that compute keeps climbing in something close to a straight line. A model that delivers frontier performance on a fraction of the compute does not just compete with Western AI labs. It quietly undermines the assumption that all that hardware spending was necessary in the first place. On Friday, July 17th, the Nasdaq Composite closed down 1.4%. The S&P 500 fell 1%. The Dow lost more than 400 points. CNBC reported those figures. Nvidia shares dropped over 2%. Applied Materials fell more than 5%. Intel and memory chipmaker SanDisk slid too. The unease spread into the memory business more broadly. Analysts flagged risk for South Korea's Samsung and SK Hynix in case Chinese AI systems prove they can compete without their chips. The real damage was concentrated in semiconductors specifically. The Philadelphia Semiconductor Index is the industry's benchmark. It had already fallen more than 20% from its June 22nd high. That Friday's close made it official. This was a bear market. Bloomberg put the total value erased across chip companies since late June at roughly $3.3 trillion. It did not stay contained to the United States. Taiwan's benchmark index fell more than 6% that day. Japan's closed down 4%. Even Bitcoin dropped, sliding under $64,000. As the anxiety spilled out of tech stocks into risk assets more broadly. The timing was not incidental either. The release landed the same week China's president was addressing the World AI Conference in Shanghai. That is a stage built specifically to showcase moments like this one. For a few hours that Friday, Nvidia was no longer the most valuable public company on the planet. We have seen this movie before. In January of 2025, a different Chinese lab, DeepSeek, released a model called R1. At first, many in Silicon Valley dismissed the claims outright. Surely no team operating under United States chip restrictions could match Frontier Labs on a shoestring budget. Then the benchmarks held up. It performed close to America's best, reportedly at a fraction of the cost. Nvidia lost roughly $590 billion in market value in a single trading session. That was the largest single-day loss for any company in history at that point. The market panicked, then recovered within weeks. The AI infrastructure spending spree continued almost as if nothing had happened. 18 months later, it is happening again. Except this time, the company behind it is not a scrappy outsider working in the shadows. Moonshot AI is backed by Alibaba, which invested roughly $800 million for a 36% stake in 2024, valuing the company at roughly $2.2 billion at the time. Today, in the middle of a fresh funding round, that valuation has climbed to roughly $31.5 billion. TechCrunch reported that figure. Moonshot is reportedly preparing a stock listing in Hong Kong. Some analysts argue Wall Street is overreacting again, just like it did with DeepSeek. They point out that Kimi K3's pricing is not radically lower than its Western competition, and that the sell-off says more about fragile nerves than fundamental collapse. That may well be true. But here is what is harder to wave away. This is no longer an isolated incident. It is the second time in 18 months that a lab operating under official United States chip restrictions has forced American investors to publicly question a multi-trillion-dollar bet. That bet says more spending, more chips, and more data centers automatically buys more advantage. Twice now, that assumption has cracked in a single trading session. Zoom out further, and Kimi K3 is one data point in a much longer war. This war is fought not with missiles, but with export licenses. For over 2 years, Washington has restricted the sale of advanced Nvidia chips to Chinese companies. The bet was that cutting off the best hardware would cap how far Chinese AI labs could go. Kimi K3 is a direct answer to that bet. It is a frontier-class model built and served despite the restrictions, using software efficiency to compensate for whatever hardware Moonshot could not legally buy. It is not isolated either. Just months earlier, DeepSeek released a 1.6 trillion parameter model, reportedly trained in part on Huawei's own domestic chips. That is a sign the workaround economy is maturing, not shrinking. And the pressure is not only coming from Beijing. American players are responding to the same open-weight momentum. The startup Thinking Machines has released its own open model. xAI has begun open sourcing parts of its Grok lineup. The open-weight approach, once treated as a Chinese specialty, is becoming the industry's default posture, whether Western labs originally wanted that or not. Expect this to reignite the political argument in Washington over whether export controls are actually working, or whether they are simply forcing Chinese labs to get more creative faster. 2 years of restrictions were supposed to buy the United States a durable head start. Twice now, in 18 months, that head start has looked a lot shorter than advertised. So what actually happened here? Not a collapse, not the end of American AI dominance. Nvidia is still one of the most valuable companies on the planet. OpenAI, Anthropic, and Google still lead most independent benchmarks. The infrastructure boom has not stopped, and the checks have not stopped clearing. But something shifted on July 17, 2026. And it is not really about Kimi K3 at all. It is about the story Wall Street has been telling itself for 3 straight years. That story says whoever spends the most on compute wins permanently by default. Twice now, a lab working under sanctions with a fraction of the funding of its American rivals has built something good enough to make that story wobble, even if only for one bruising Friday afternoon.